Good afternoon, and welcome to the BTI Market Outlook and Client Service Review. We're delighted each one of you could join us today. It's about 49 degrees here in Boston, and a good evening and good morning to those of you that are joining us from other parts of the world. We're very excited to have you. We've got a little over 1,300 people joining us today. There may be a few more that jump on as we get into the presentation, but we have a lot of material to cover today, and we're very excited to share this with you. So to get started, first thing I wanted to do is, after thanking you, I have two people here I'd like to thank, Joy Harnois, our Director of Client Services, and Megan Bresnahan, our Director of Marketing, who have been quite instrumental in making all this happen. So great thanks to them. One more note, as you can see on the slide, we will be only taking questions by email today. So please email us your questions, send them to us, and we will respond once the webinar is complete. So we look forward to hearing from you on that note. Now, as we move ahead, one of the things we've learned is that as we studied the research, especially in the last 2 years, much of success in the world, much of success in the legal market is going to be timed to precise timing. And what does that have to do with eggs? Well, for the egg lovers, for the egg cookers out there, what we found is that if you don't cook the egg just right, you're not going to get exactly what it is you want, and you may not get something that you can use at all. But time it right, and you've got exactly what you want, whether it be a raw egg for the trainers and the people that are going through unique diets, and you've got soft-boiled and hard-boiled eggs. But the choice and the point is that if we pick our timing and we know how to pick our timing, we'll get exactly what we want. Now, the question is, how does this relate to the legal market? Well, as we look at the legal market, one of the things we found is that clients, top legal decision makers, hire new law firms like clockwork every 2 years in their role. So when they reach their 2-year anniversary and when they reach their 5-year anniversary, they're going to go out and they're going to look for law firms. The reasons being is that at 2 years, generally speaking, this is when a new top legal decision maker starts to get their sea legs. This is when they start to understand how their department works, how their department and their company works, and how it all fits together. So they're going to go out, they're going to look for law firms that will try to help them with that role. Then at 5 years, things get a little more strategic. They understand how the strategies fit together, what the nuances are, and what they're going to do is they're going to go out and they're going to look for those firms that can fit into the strategy and the longer-term vision as they see it. So if you can tie into these things, this is going to make an enormous difference in what's going to happen with hiring, what's going to happen in your client base. Now, as we look a little bit beyond this and go past 5 years, those top decision makers that have been in their role for 5 years or more, generally it's more of a marathon. We haven't found these clear jumping off points as we did at the first 2 and at the 5th year. So it's kind of like a marathon where you're keeping up with client service, you're staying with or ahead of expectations, and as you start to drop behind, what happens is clients will look around for other firms to replace you. There's rarely any warning, there's rarely any discussion. Clients will let their law firms just kind of fade away into the pack and into the background. So using these to our advantage intuitively sounds like a smart thing to do and clearly makes a lot of sense, but there's a much bigger implication when you go ahead and you look at the marketplace. Our research is showing that for the first time that half the market is really in the key sectors that are going to change top legal decision makers. And if you look at those that have been 2 years in their role, okay, and now this is a very important point. It's not 2 years worth of experience. It's 2 years worth of being in their current role. So what happens is if they take a new job and they go back and they say, okay, who have I worked with? What have I done? But it isn't 2 years out of law school or 2 years into their current careers. This is typically the top legal decision maker that has 2 years in their role is bringing 15 years of experience with them. And that means, it could be, we found as much as 18. And what that means, of course, is that they are coming in with a fair amount of opinion, a fair amount of intuition, and experience with law firms. One of the things we found that they really want is, compared to the other two cohorts, they want more law firm engagement. They want to hear from you more. They want more dialogue. They expect more dialogue. So what this is going to do is setting the expectation as we move forward. This cohort wants to hear from you much more than the other two as they move ahead. Now, as we look at the second one, what's going to happen is you can see that they're looking for more business understanding, and what they really want is, and what's different about them is that they expect to move into a business role. That is, their plan is to move roughly into some kind of business unit leader, some type of executive role. And because of those reasons, they want to understand more about the business. They want that to come from their law firms, and they're demanding that. Now, what starts to get more interesting and has more strategic and day-to-day impact on law firms is these decision makers with 2 years or less experience have a different set of preferred law firms. So these folks up here, like law firm A and B, and down here they might like C and D, and there's a little bit of overlap between the two, but there's also some clear differences. So knowing and marketing yourself and positioning yourself for these is going to be the difference between winning new work and not winning work. It's going to be the difference of your ability to win the kind of overall schema of new work, not just individual bids, but how they think about their departments, how they think about their law firms is going to be different than everybody else. And your challenge is, of course, is how do you fit into that across the client base? How do you match up your attorneys to the attorneys that are going to be most compatible with the client? Those are the big questions. Then when we get into the having 5 years or more experience, we start to see yet another set of behaviors. First of all, this is the most competitive segment that there is. The set of law firms that they prefer, again, there's some overlap with the other two, but there's also some clear differences, but it includes the most number of law firms. They are the most, they'll consider more law firms than everybody else. They have some other preferences, and here what they're really looking for, what's different, is they want to know what's new, what's the substantive insight. They don't want to know just that there's a new regulation. They want to know how deals are looking differently. They want to know what the new litigation strategies are, what the new settlement strategies are. They want to know kind of the state of the art in the various practice areas and the places and the matters that give them the most kind of exposure in their portfolio. So now all of a sudden you've got 3 cohorts or 3 segments of the marketplace, and they are looking and they each want something different, as well as have different hiring patterns. So the big impacts when you look at this overall, because the first time that we've been tracking this in our 30 years doing this kind of thing, you can see that roughly just over 50% of the marketplace is now made up of these individuals that are approaching their 2-year mark or their 3 to 5 year mark in the marketplace. So what this means is that you've got roughly half the market that is out there actively thinking about how they're going to change their law firm panels in a fairly wholesale way. And what is more important is this number is just going to keep going this way. It's just going to keep going and moving because these people eventually are going to move into retirement. And don't forget, there's a cohort in here that's going to take a different path to a business unit, which is going to bring more people up in here, down in here, and then through this. The law firms that can position themselves know this, know the background and the demographics of the individuals that are either moving into their client base or they're pitching to are going to do a lot better than everybody else, because everybody, of course, wants their custom approach, but more importantly, the messages are different. They're quite different in some cases. So how do you put this together? How do you go in? How do you analyze this? And what impact, more importantly, is it having on the overall marketplace? So this could be, and we think is, the main reason why an amazing 70% of clients hired a new law firm for a major matter in the last 12 months. That's 3/4 of the client base. It's an enormous number. It's the highest that we've roughly ever seen it across the board. And the main reason is this tremendous generational turnover that we're seeing. And those firms that can take advantage of this are part of that group that is growing, because we found about 35% of law firms are growing and 55% are actually giving up business. But the 35% or so that are gaining understand this. They either understand it intuitively or formally and have programs and systems to go in and track this and play to the changing demographics to their advantage. Now, what's interesting is that when you look at it, we found that the firms that are winning the substantial work, 53% are larger firms. So that's roughly going to be, we're going to call that 800-900 attorneys or larger. And then you've got the mid-sized firms with them winning 47% of the work. So any of the myths, any of the discussion that the mid-sized firm doesn't have opportunity, that clearly doesn't be the case. Those firms that are recognizing what the larger firms recognize, which is the change in the client base, are still doing well. They're winning substantive business in a competitive market. So hats off to them. And again, we think that this creates opportunity. It's an equal opportunity creator for every size law firm that wants to put the strategic energy, the strategic resources into making sure they understand which and what client they're talking to. More importantly, can they anticipate that change? Can they work ahead of the change to see if they can win that work while the client is rethinking who they want to work with? Can they convince the client not to go out to bid, not to conduct this broad sweeping look for new law firms, or even if they do, to make sure that they keep their place and use it to build their business? Now, we have a fair amount of evidence that that's taking place, because if we look at all the awards of new business that were made, 45% were made without a bid, 32% were made using an RFP. Now, first, this is a record. This is the highest we've seen it. So this number we also expect is going to keep going up. Now, your challenge is, how do you get over here? The thing with a no bid award is, you may, as a client, go out, you're going to casually interview one or two law firms. You may make it a little bit more formal process and let them know you're considering giving them more work. But this is where that ongoing dialogue, the discussion, your knowledge of what that client is going to do, what inside knowledge do you have? What do you know about their culture, their operations, their risk environment, their risk tolerance? All those things. What's the chemistry? Are they changing the way that they're approaching litigation, as so many clients are right now? All those things will keep you on the side of being on the no bid, that is, no RFP. Now, the dangerous part of the no bid RFP is the client in their mind may, in fact, be looking at you and evaluating you for sometimes very substantial new assignments and not tell you. So this means that you are engaging in an interview, you are engaging in an evaluation where you may not necessarily be formally aware that this is what the client is going through. And if we don't up our game, then we might lose that no bid award. And those things are that's just a shame to lose. The only answer to that is to act, in fact, like we have, always in a no bid situation. Are we uber responsive? Are we doing the things to understand where the client's headed so we can know things that other law firms can't possibly understand? Now, one of the really interesting things, this was in a blog post 2 weeks ago, is one of the big benefits of an RFP to a client is This is where they get some really good ideas. That's the number one benefit. Now think about that. There's no reason on earth they can't get their good ideas when you're already working with a law firm. But for some reason, law firms, many believe that, well, if I'm doing the work, I'm so busy billing time and making deadlines, I don't have time to share good ideas with my client. Well, it takes a lot less time to share them over here than it does over here. And those that make the time are winning more business at better rates with a lot less effort by being able to compete on the no bid award side. So this is something that we're trying to etch in the brain of every law firm that we meet, because unless you're loving RFPs, more work is being awarded under no bid. It's usually a larger amount of work. It's usually at better rates, and usually it's a little bit more engaging and a little bit more fun than just a clinical RFP process. So this is a real opportunity as we move forward as law firms increase their hiring. Now, of course, one way to do this is, and really the only way is through client feedback, to get not just, what are their goals and what do they want, but what are their new expectations? What kind of risks are they facing? How have these risks changed? Clients are looking to go a little bit deeper, so it's not just really a matter of listening, it's a matter of sometimes it's listening, sometimes it's reading between the lines, sometimes it's understanding what your client hasn't said, what's missing by omission. It's taking that deeper dive onto what kinds of very specific, I would like to use the example, it's great to ask about goals, but within the context of those goals, what do they have to get done in the next 6 months? What gaps are missing? And those are the things that are driving especially those first two cohorts of new hires, because they're faced with all these things that they have to get done, and they have less experience at their organizations, so you are in a better position to provide the resources that they need. This is often missed, but it's not necessarily missed to the best performing firms. Now, two examples of that showed up in the BTI Client Service A team this year. These are the 17 activities that clients rely on, and many of you will recognize these. But if you go to the upper right, which is the most important quadrant, everything up here is much more important than everything else on this chart. These will influence how your clients think about you and represent the investment that you make with your client. The two that showed up this year in a big way and are tremendously influential are, first, dealing with complexity, and then second, uniformity of service. Now, when I'm talking to law firms, the law firms that are doing really deep dive client feedback, that they're getting into the nuanced questions, they're getting into the deep dialogue, they're maintaining a dialogue with their client, they're fully aware of the complexity that their clients are facing, and they're fully aware of how their clients define what it means for a law firm to enjoy complexity. And it means things like being unequivocal. It means things like scaling your team and making it bigger when you see things getting more complex and higher risk. Those things don't typically come out. So the firms that are doing well at client service tend to understand this and are responding to it. And understanding it and responding to it are two different things. The other is this idea of uniformity of service. What we hear more and more from clients is that as cases generally are getting bigger, and as they are getting bigger, they're working with more attorneys, more offices, more practices. And what clients tell us is that the level of service, the level of understanding, the level of aggressiveness is really different from attorney to attorney, from practice to practice. This unnerves them greatly. They want to work with firms where the level of uniformity is unique and high, meaning that everyone performs to the same high level of service no matter where they go in the firm. I'm not saying it's an easy thing to do, but it's much easier to do if you take every team that's servicing a client and can kind of set the standards for those clients. One of the things we're seeing is, about 8 or 9 years ago, maybe even 10, law firms started really adopting client service standards. Now, for larger clients, we're starting to see client service standards for an individual client. And eventually, that'll filter down so that more uniformity is kind of the standard. Everybody in a law firm will understand what the standard is. And right now, these are two of the biggest things that clients tell us are preventing them from using law firms for some of those big assignments. That in addition to all the other things that are on here, but those two things really are new, and clients tell us that fully 55% of all law firms are not really responding to this or this in any substantive way that they can see. That they may even realize that there's more complexity, but don't change their approach. They don't add attorneys, they don't change their work plan, and they don't make direct recommendations. They make you, Mr. Client, Mrs. Client, here's 3 options, and you ought to take one of these without sticking their necks out and saying which one makes the most sense. So those two have been overly influential on client service and the development of new business, while the others still have been tremendously important. So when we look at what that's meant to client service, when we measured client service and we asked 350 corporate counsel to tell us who's best, it's not surprising to learn that just about 50-50 split. All these folks over here are not mentioned at all for client service, kind of missing in action. Everybody here was identified in some way. The more you head up this way, the more you're recognized and the more factors that you're recognized for. Now, I hope you all remember the 47% of mid-sized law firms that were winning substantive new business. Well, I can promise you, and I would welcome the opportunity to sit down with you and show you that, generally speaking, they are over here. There are virtually none that are over here. So some kind of client service is helping them driving business. By and large, actually, if you look at it, they're kind of right in this area in here, because we did go back and look at each and every one of them. So it's showing that, again, the mid-sized size firms that are investing are enjoying the benefits, while the other firms are kind of trying to figure out how to catch up. I'm sure all of you know that the top 30 firms are outperforming everybody else by anywhere between 9 and 15 times as measured by score. And those firms, have a real opportunity to clean up with new business, as long as they too are faced with the challenge of, this kind of roller coaster of turnover, because their clients are also going to be, changing their demographics, and it's just a natural process that none of us can really avoid. When we look at the BTI Client Service 30, what we find, again, is there's a few mid-sized firms in here. Fagerty Baker Daniels is about to become a much larger firm. Certainly Baker Hostetler, if you look at the firm, Alston and Bird, and there's a few others kind of scattered in and out through here. But as you look at it, the interesting things are Arnold and Porter has really managed to improve its client service since it merged with Kay Scholler a few years back. And as we look at it, Covington has also really improved its client service. And each one of those firms has taken very active steps and changed the way they approach clients, changed the way they dialogue with clients, and that has really helped them in their client service initiatives. The other things to look at that I think are really important, almost every firm on here that's improved, or every firm that has been on here on a multi-year basis. So when I look at a Jones Day, who's been number 1 12 times and is the 4th year in a row, when I look at a Gibson Dunn, when I look at a Morgan Lewis, when I look at a Sidley, when I look at a Skadden, I look at a McGuire Woods, all Greenberg Traurig, all of these firms have very sophisticated client feedback and listening systems. They have training systems to be able to use this and get this out to the partners in a systematic way. And they also are trying to mix it with their business development to improve their growth. But the point is that these firms are using these kinds of things to improve their client service and get more business. So if you're going to look at what makes them a little bit different than everybody else, what I point to are a couple of things. First, they've kind of moved out of what I would call phase one client feedback. They're using really deep, meaningful, and transformative client feedback. They're using things that, and when I say transformative, I don't mean that it is this amorphous thing that shows us how clients are thinking differently. What it does is identifies very specific behaviors that attorneys can engage in to change the way clients think about the firm. So in today's environment where you've got so many matters, you've got so many complex matters, going in and talking to them about, triaging, about assessing the new levels of risk that they learn about through client feedback, where they learn about the client has an assignment to assess cybersecurity and has absolutely no staff. This won't come out unless you're asking your client where their gaps are, how they're filling their gaps, where their staffing and resource shortages are versus what their short-term priorities are. These are new things for most client feedback initiatives, but for the BTI Client Service 30 and frankly many BTI clients themselves, they are seeing this kind of deep dive, much more specific feedback. And that's the kind of thing that's really changing the nature of client relationships for the better. The other thing they're doing is they understand this demographic shift. They can tell you which clients are going to change, when they're going to change, and they can tell you how they plan to use this change to their advantage. They don't want to let this work get out to bid. They want to win it. They want to win it big, and they don't want clients to ever think about other law firms. And most of them are having some fairly large-scale success. Second, they're looking at firm-wide trends. And what does that mean? Part of the client feedback process, and this is missing from a number of client feedback programs, is they don't take all the feedback, put it together, and look at it on a firm-wide basis. We had a client just 2 weeks ago where we put all the interviews together. We analyzed it as one big group of thinking. And one of many things we found is that their clients were going to double the amount of M&A activity that they engaged in from last year, double, and it was already substantial. So it's going to be the single largest area of spending for these very large clients. And if you don't think that that changed their approach to business development, it just changed everything, because now they're going to go in and see all those clients. They're going to go to them with checklists on how to drive and streamline the M&A process, how to reduce risk, how to manage risk, how to conduct due diligence. All those things are the way you get clients to not think about going out to other firms. Training, this is relatively new. Client service has been around, but I can tell you training is starting to take off. We see more and more firm-wide initiatives for training. Most of it's being done by a combination of instructor-led and web, so that partners don't have to fly all over the country and the world. They can do it in short bites. But what they're doing is they're training in uniformity. What's the standard? They're training in how to deal with complexity. And that involves communication. What to say, not the words, but what kinds of things and when. And they're moving into infrequent communications, rather frequent communications, many frequent communications, creating ongoing dialogue. And all these things, they're not just providing training, they're providing tools, they're providing opportunity for mock discussions. I mean, they're really going in depth, and it's having an enormous impact both on business development and client service. That's one of the reasons you're starting to see the larger firms really gain, is because they're investing in all these things that create revenue. Then this is relatively new, dedicating client development resources. Back 10 years ago, 11 years ago, having a client development executive was really rare. Ropes and Gray was probably one of, maybe not the first, but one of the first certainly to start investing on a large scale. Having a broad number of client development executives who do nothing but go out and understand clients and then share that with the partners to create the right plan, create the right set of legal resources, and meet the client's needs. Clients absolutely love the client development process, and now we're starting to see it come out more and more. We're hearing more law firms are bringing in these kinds of resources, and if it's not a client development executive per se, what they're doing is they are hiring individuals to do nothing but track, analyze, and supply all the insights and information to the attorneys and the team about either one or a group of clients so that they can be prepared. They can walk in with the understanding. They can walk in with the understanding of the metrics. They can walk in with the understanding that the other attorneys have, because this dedicated group goes out and figures all this out for the attorneys. This is more of a cultural issue. Law firms, the BTI Client Service 30, are unrelenting in improvement. They just don't stop. I meet a number of firms who have improvements, and they stop and they smile, and they should feel good, but it is unrelenting. They just never stop. They keep improving. They keep improving the training programs. They continually set new goals, and that way it keeps everybody moving in forward direction. And then finally, I just can't emphasize, they're hearing feedback other firms don't. And that's a direct result of this. This is your K2. This is your deep dive insight. This is your secret weapon. If you have this, you can use it to go and get work that other law firms can't even think about. So why do we spend so much time figuring out how to get business without going to RFP and getting the new business that's coming in the door? Is because of the new business that's coming in, which is fairly substantial, 8.9 billion, so that's with a B, is new high-risk matters. Frankly, clients aren't that excited to put this out to bid. They'd rather award it on a sole source or no bid basis. But they need to find the firms that they can have the dialogue with, and not just a conversation, not just exchange of words, but a real dialogue. Clients want, they believe that law firms want to talk about these things, but only a select number of law firms really want to engage. They want to take the deep dive. They want to understand the client perspective, as opposed to just providing a group of answers that clients can choose from. So this is the reason it's worth it to do all that work to get the deep understanding, to get this amount of work, which is coming at the high rates than everybody else can get it. Now, if you're looking where and why, look at right here. Companies reporting bet the company work went from 17% to 33%. So not quite doubled, but good enough for my tastes. So the highest end of the market, the most complex litigation that there is, the complex matters, are what is driving the marketplace, followed by yet another increase in merely high stakes. So these two, where the big money is, where the big risk is, both the fees and the risk, is where the growth is. So this means two things. One is for existing clients, making sure we're positioned to get it. But secondly, this is the number of companies reporting. So that means that twice as many clients are now facing these bet these company matters than last year. So it's also about new BD. How do we get to these clients? How do we, and hopefully we're getting referred in, but if we're not, how do we attract them? Because they're not going to respond to an email newsletter. They're not going to respond to a general webinar. They're looking for that deep personal attention, because these are deep personal high-risk matters. And that's one of the things that's vastly different about prior years in marketing. Now, A second look at the spending also tells us a few other things. This right here is the line that tracks outside counsel spending. This is the total market for legal services at companies with $1 billion or more based in the United States. Now, this is started on an upward trajectory, but if you look at the client spending, it is roughly flat. So clients are digging in to their own budgets and giving it to outside counsel. At some point, either this has to go up, this has to go down, or something has to happen. This can probably be sustained for a little bit more time, but this is why you're starting to see a comeback in AFAs. This is why things like alternative staffing, and this is where your innovation is coming in, is what do you do to squeeze more work out of their budget, which isn't really changing. And of course, the other thing to realize is there's all that low risk work, and that's headed down. So that's going to be, kind of what the world looks like. Now, breaking this down a little bit further, what we find is that there's roughly 17 practice areas that we track. To make it easy for you, the premium practices, one getting the higher rates, are over on this side of the chart. And then anything that is, this is the market growth rate. Anything above here is growing faster than the market. Anything down here is growing slower than the market. This line, in case you can't see it, is the 0 mark. So you can see most practices are growing. Most are growing faster than they've grown in years. And, this is a real opportunity to get onto the kind of business development train, because it's a little bit easier to get new incremental money than it is to take money from others, which until 3 years ago was the only way you could grow for the last 10 years. So what I'd like to do is take this opportunity to look at a couple of individual practices and focus on a couple of key things. So the first would be M&A. We're hearing a lot of good things about the M&A market. Roughly 2/3 of top legal decision makers see activity increasing, staying at the same pace that it is. It's kind of interesting if you talk to them, because what they say is that right now it is a seller's market. There's more buyers than there are sellers. The corporations would tell you that it's fueled by PE, who have a lot of money. The PE folks would tell you they're just looking for opportunities. So either way you look at it, there's an increase. It's going to, the mega deals are going to be opportunistic. The mid-size and smaller deals are going to be a continuing stream at a very, very high rate. So that's just going to continue. So a lot of activities. We're fairly optimistic about the M&A marketplace. If we look at IP litigation, one of the few areas that's not showing a lot of growth, but the matters that are left are showing increased spending. They're getting bigger, 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 and bigger. So you're kind of doing some trophy hunting in the IP litigation world. You're finding the bigger matters. There's few of them, but when you get them, they're going to be bigger than you've ever had before. And probably your client is going to have more exposure than they've had before. So having that nuanced knowledge and discussion of risk applies in IP litigation as well. Now, litigation itself. So if I could, what I'd like to do is just draw a line and say that there's two litigation markets. This is the market we talked about before. This is the, high risk, high rate. It's complex. And this is growing and growing and growing. This is the lower risk. And this isn't growing at the extent that the high rate is, but what's happening is more and more of the money is being shifted to this side. So that means, in addition to all those great things like AFAs we talked about and alternative fees that we talked about, there's also good old-fashioned rate pressure, which clients are more likely to put on this work because they're very concerned about the risk profile here and know they have to pay higher rates to get what the talent that they need to deal with that risk, and risk is commensurate with the rates. But over here, there's probably disproportionate risk rate pressure on this work. So if you're down in this segment, the only thing that's going to save you from that rate pressure are AFAs, alternative fees, alternative staffing, and streamlining, the same things that are going to help if you're trying to get the whole package. So this is what's kind of sucking everything back into the market. It's driving the interest in innovation. So anything you can do to package up the work, take large swaths of the work in the lower risk world, that'll get you there. And then on the high end, we spent a lot of time understanding the nuances and getting the feedback, but that market is split and will probably remain split for the foreseeable future. Now, cybersecurity and data privacy. I don't know if I saved the best for last, but certainly the most interesting. This market is just poised to grow and grow and grow. Right now, only 55% of companies have a budget. What that means is they haven't even formalized the approval yet. Some of it are paying for it out of IT, some law, but either way, this is expected to grow dramatically. As soon as CCPA became law, every company is now of the belief that the amount of activity related to litigation, the amount of activity related to regulatory investigations, to cybersecurity and data privacy are going to start ramping up all over the United States. They are expecting every state to pass their own regulations. They don't believe they're all going to be uniform, and they believe that it's just going to cause a whole group of litigation. It's going to cause a whole group of class action suits, and they're prepared and preparing to spend enormous amounts of money on the cybersecurity marketplace. Now, one of the things we need to emphasize, we're about to release a report on the cybersecurity market, and one of the things we found is that fully 27% of clients, okay, I want you to remember that number, 27% of clients say they are seeing no meaningful work, no meaningful business development activity or marketing from their law firms in the cybersecurity arena. So that's a quarter of the marketplace that's seeing nothing. They don't know if their law firm is interested. They don't know if their law firm has anything more than a cursory email alert that goes out. Our research is showing the best way to reach these people is digital media. In some ways, that's just not surprising. But of all the practices we're looking at, this one is going to top all growth over the next 3 to 5 year period. And those that are positioned are going to do very well. Those that try to get into it kind of on an ad hoc basis are going to have a much harder time than everybody else. So looking across the different markets and looking across the different industry segments, what we've got is a couple of different kind of sub-markets, if you will, and it's quite different by industry, or it's quite different by practice. So since we just talked about cybersecurity, I'll start there. If you look at cybersecurity, what you've got is a total of 7 areas where it's going to increase. Now, you can also see that there are no areas that have low growth prospects. So everything is either medium to strong spending, medium to strong pricing. You can see they're in the big industries: banking, consumer, financial services, healthcare, insurance, professional services, utilities. These are the places right now. We expect this group to get bigger as time goes on. We're just kind of watching for when it hits pharmaceutical, when it hits telecom, when it hits food, and when it hits high tech. It's just going to be bigger and bigger and bigger. If you look at it other ways and look at it by industry, the first place I'd go, because I think it's kind of interesting, is energy sees premium areas in 6. This is met with downright skepticism by law firms, except for a very few who serve energy companies. But this marketplace is surging back, and they're spending a lot. You can see on regulatory class actions, securities, and they're also swapping a lot of assets. If you move down to high tech, so you can see high tech, you've got 6 areas of premium practices. If you move down to pharmaceuticals, you've got 6 areas of premium practices. But what's interesting also, if you move to financial services, you've got 7. Okay, now, so you got 7 premium practices, 6, 6, and 6. Now, what's interesting is these are the largest spenders. These are the second largest spenders. These are the third largest spenders. And the top 3 largest spenders on legal also have the biggest needs. So I'm not saying that the other areas aren't attractive, because they are, and they each have their own opportunities. But what I am saying is, if you're playing in these markets, get ready for some serious demands from clients, be able to respond. It's probably going to attract competition because there's a lot of law firms in these segments. But the opportunities, I can't remember, having done this for about 19 years, when the opportunity chart looked as attractive as it does today. It looks more attractive today than it did before the financial crisis. It's more broad-based. It's got more substance to it. So there's a lot of opportunity in each practice. There's a lot of opportunity in each industry group. Of course, those of you that are friends of BTI know that we think the industry groups are probably going to be the leaders in terms of driving new business. But the only exception may be cybersecurity, where clients are much more interested in your experience in cybersecurity than they are in anything else. And then we'll move to things like industry understanding. So we're pretty optimistic about 2020 as we look at it through this lens. So there's a couple of strategic recommendations that we would make to drive this opportunity in the marketplace. And what I would say is, every law firm is equipped to perform the deep dive demographic analysis on their top client group. If it's not something that you're familiar with, we can certainly help you either formally or informally, but the tools are out there. Then going a step further and developing planning tools and retention tactics for anybody in the 2- and 5-year anniversary mark. Going client to client, specific to specific, to make sure that they don't go out and go to the RFP, or if they go to RFP, that they send those RFPs to other law firms. One of the key things that we haven't talked about, this is new, clients want their law firms to be more aggressive. Now, the great thing about being aggressive is, everybody's got their own definition. It's just like cooperation. I don't know what it is. I can't tell you what it is, but I sure know when I have it. And we're recommending that our clients go out and talk to them about what is aggressive. What does that mean? What behaviors represent aggressive? What kinds of tactics represent aggressive? We have one client, we're developing an aggressimeter, so that we can kind of quantify and then get a qualitative assessment of what aggressive means and how that translates into action. This is one reason that law firms are losing the complex work, because clients want aggressive law firms, but most law firms come in, they show all the different matters that they've ever done, they have all the statistics, but they can't tell this. We've already talked about conducting ongoing probative feedback for business development and training. And then, just to move to a slightly different topic, we can't overemphasize how big the cybersecurity market is and how underserved it is, because clients just are, they're not baffled per se, but they do scratch their heads because they say, why aren't the law firms coming after it? And then, there's a lot of talk about the Big Four. Well, the Big Four are playing in this marketplace. They're in there doing the things that law firms want to do. And this may just be one of the points that brings law firms in and shows what they can do in the cybersecurity market. But there's enough time that for every law firm that would be interested, that they can go in, they can prepare themselves, they can reach out to clients. That's the big thing. Remember, 27% of clients haven't been exposed to any marketing and business development. Boy, I sure wouldn't want that in my firm if I'm going after this marketplace, even just to start to create the dialogue, because it takes time to develop the client. So as we look at this, we're looking at blocking and tackling, we're looking at tactics, we're looking at specific opportunities to drive the not only revenue, but to drive client retention and to drive new business. Those are the core things in today's market that we see as big risks for firms. Technology is a whole nother risk, but that's a topic for another day. What we're focused on is making sure we have, keep, and attract the best clients, and that we help develop the most robust and resilient client relationships possible, and don't leave any opportunity or market absolutely unserved. So hopefully our goal was to provide you with that insight during the last hour or so. We hope and we can see that there's a whole group of questions that we're eager to answer for you. We welcome your calls. We welcome your emails and your feedback, and happy to talk any of this through. We will be providing a copy of the presentation to everyone that's here. And again, I'd like to thank you all for spending time with us today, and have the opportunity to share this with you, and look forward to doing it again soon. We're going to try to do another one later this year. And again, a recording of the presentation will be available. We'll send you links to that. Send us your questions, give me a call, and be happy to talk this through, and wish everybody luck in the market ahead.